says, seems to me there was a tea party in Boston that was illegal, too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold. You know?
Why do central banks hold it? Well, it's a form of reserves. So why don't they hold diamonds? Well, it's tradition, long-term tradition. Well, some people still think it's money.
And you're back on the Junius Multi-Channel. Welcome, live. The extemporaneous ramblings of a madman, broadcasting unscripted here. As we take a look at the news, stories, charts, incoming information, as well as some dispatches from correspondents in the field. It's just another day, another 52-week high for both gold and silver. It seems like it's smashing records every single trading day now. I'm opening up on a unique chart, however. Welcome, friends. I see you all in the chat. Glad you're here. I see a lot of familiar faces. I've got, who do we got? We have Bill Spencer, Hauser SC, Cosmo, MM126, Gold Swan, Crooked Saint. Welcome. Who else we got? Any more channel members? Am I missing anybody? I got you, Bill Spencer. Thanks for being here. Thanks for all you do supporting this channel. Methodicus Albrighticus. Good to have you as well. Oh, so many good channel members here. You guys are always in line, ready to go. All right, this is interesting. All right, we are getting really close here to crossing. And again, inflation's a very debatable subject. Am I right? The numbers, 83 numbers, 1980 numbers, the 1990 or 91 numbers. They've changed it so many times. The government data is pretty foggy, pretty shady. All right, the shadow stats, as we call them, the shadow numbers. They like to hide the truth and correct their own report card. But if you go by whatever metric is plugged into this site at macrotrends.net, use this chart and this page sometimes. There's some good data in here. We are getting extremely close. I'm going to show you a few things here before we get right into some of the stories that have been discussed in the last 24 to 48 hours. We're getting really close to crossing over the inflation-adjusted all-time highs. You can see that blip, that narrow, very, very narrow in time duration blip on the gold charts here back in 1980. You know, that's when everyone talks about, all the anti-gold people, the gold bears, they focus on this one line, this one moment in time where gold went crazy. You know, it had only been legal to own for like 6 years. You know, it was like cocaine and heroin in Portland. Everyone just OD'd on the streets immediately and lived in a tent. It was a blip. And of course, there was a lot of manipulation. There's the Hunt brothers situation with silver. We were coming off of the Volcker interest rates, the Jimmy Carter years, massive inflation, tensions in the Middle East, oil prices. Americans were freaking out, right? And so gold spiked. Trading's changed, obviously, since then. Technology's changed, the speed and execution and velocity of trading. Not only that, but people themselves, their mindset waking up to the way inflation works, fiat. Not trusting government. I would argue that people perhaps had a little bit more trust and when it comes to the state back in the 70s. But I think globally, the demand and appetite for precious metals and the disdain for the state and the recognition of government malfeasance and lying and an understanding of history and basic economics, there's been somewhat of an awakening, especially here in the United States, with many different movements, and then the circulation of information via the internet and other outlets, causing people to pay more attention to what's going on. But if you look at this, And you can do a couple of things. So you got this log scale. I can click that. I can go to. I can take the inflation adjusted off, and you still see gold breaking. I mean, it's breaking records there. It's higher than if you take the inflation adjusted out, gold's just smashing its way up. But if you do that inflation adjusted again, just to take the arguments away from those individuals who like to point that out, you've got gold poised to setting itself up for going I believe much higher than this. I left a comment in the chat earlier. I believe that there's a disconnect now. It's disconnecting from the dollar as we move into a multipolar world. Dollar hegemony dying, U.S. influence waning, U.S. manipulation of markets waning, the rise of the BRICS, the rise of the influence of China, Russia, and India, and all of these other nations and trading partners, the death of many currencies, disruptions in bond markets, bond rates rising, even though no one wants to buy them. U.S. debt completely out of control. This just shows me that gold it's on its own, as usual. It's on a run, it's on a tear, and nothing's going to happen as far as their ability to stop it. I'm going to read you something I sent some friends earlier as we discussed this. But you can see with inflation adjusted how close we truly are to breaching. We are, I don't know, what are we? I'll look at the chart in a minute. We're like $5 or $10 short of $2,400. And I pointed this out earlier in the week. If you go to 1999, gold at $256. When you look at what people are paying per ounce of gold now with premiums, we are indeed 10x from 1999. We're 1,000% off those lows. So gold has 10 times its valuation in fiat leper currency since the 1999 down. So that's something to consider. You know, the premiums back in 99 were much lower. And many of you recall you were paying $10, $15 over spot for an ounce of gold, maybe 20 if they were Eagles. It wasn't as bad as it is today. So you were paying maybe $270 to $300 an ounce. Okay, 28, $280. I would say some people were mostly at those lows were paying that. We're seeing now higher premiums. If gold's at $2,400, I don't know what the price is. People are able to snag a physical bullion round off the market today for those same coins. I'm talking Maple Leafs, Krugerrands. Buffaloes didn't exist back then. Eagles, things like that. But here's that 1980 inflation adjusted. Where are we at? I'm trying to get this to stop. It says here 26.29. That's about the highest I can get on this inflation adjusted chart. So if you take that into consideration, when we hit that 26.29 mark, if we pass it, which I believe is going to happen. Again, we've already hit levels that were the high points predicted by many of the major banks this year. A lot of banks early in November, December were calling for prices in 2024, 2,300. The highest I think I saw was 2,400 quoted by any major bank coming out of Wall Street with their little prognostications. We're hitting those numbers now, and it's April. Okay, so there could be that sell in May go away. We could see a pause, a reprieve here. I don't know, because the Fed's in a really tight spot. They don't know what they're doing, and we're going to see that in a moment. Their absolute ineptitude is just bright and shining. I mean, and they're making it out to be a virtue at this point. They've made an art of it. Thanks, Cosmo, for the super chat. He goes, commercial RE about to tank, getting relocated now. Real estate's also, it's in a bad place. Major pause, major slowdown there. Very good point. So here you go. Let's just, and if I take off the inflation adjusted, we'll go back to that. 1980 was like $800, whatever it was back in May of 80, 550, 515, 664. It blipped about, I think, intraday high of somewhere I thought around 800 back then. Not positive. I don't keep those numbers. I got too many things I have to remember in life, so I don't memorize gold numbers on particular dates. One of my favorite parts about this site, though, and I'll just go down here real quick. The annual changes here that you see in green, right? You go all the way down here. When you start counting and you start looking at gold's performance from 69 on, the down years and the up years, and then if you averaged it out and you looked at the average gain of gold year over year, every single year, what is it doing? There were some massive years back then. 48% in 1972. 1973, 73%. 1974, 67%. We will very likely experience years like this again. This is a likely scenario where you will see this type of activity, perhaps much more so, even triple digits, like 100% years. So just remember that these numbers do exist in history. There's some tiny little dips in there. Oh, 4%. I lost 4%. No one really cares when something dips. The bears do. They focus on it. But, gold can do a 50%, a 70%, and a 65% year 3 times in a row. If it dips 4%, they lose it. And they call it, and they focus on it and say, this is it. It's a bad investment. No one should buy gold. And the very next year, they'll ignore it when it does 23% or 35%. Here's a year, 1979, 133%. Next year, 12%. Took a dip in 81, 32% down. Big deal. It's already, the year 1979 can eat all of these downs combined, devour them, and it's still green. And as it marches forward, there's some other dip years, small. But overall, when you look at this march here from 2001, look at this, from 2001 all the way up till 2012, nothing but green numbers. Anything from 1%, 23%, 21%, 5% essentially, 17%, 24%, 31%, 3%, 27%, 28%, 12% we'll call it, I'm rounding some of these, and 6%. Just non-stop gains for over a decade and a quarter. Non-stop. Then you've got a dip year in 2013, a negligible 0.19%. I mean, we're going to call that a zero. In 2014, 11% dip in 15. Got eaten up, made up for it in 2016 and 17, 1% down in 18, and then 2019 and 2020, we're up 19% here, 24.5% here, little dip in 21. We'll call it a zero in 22, and then we're up 13% in 2023. We're so far up 15% this year. So gold up, I would, year over year. All right, it's marching. So what's next for gold? What's next for silver? Let's look at some news, and I will read to you some dispatches, correspondence, some of my own words that I sent to some friends, some of their insights. I've got some good articles pulled up for you, but let me just get to, let's take a look quickly at here. We'll go to the numbers. We'll go to the numbers on the board. Gold, earlier it had closed at 23.90. You're seeing some after-hour flushing out of the markets, what's taking place. But 23.89, these numbers are still adjusting. They'll see them move maybe while we're even here on the live. But on the COMEX for June 24, we've got 23.89.30, up 16.60, up 0.7%. Again, the markets are supposedly closed right now. But this is your 1-year chart with gold. If we look at a 1 month, I mean, just marching right up out of this, this down here, we were at 21.60, it looks like. And we're already at 23.89, 23.90. 3-month chart, again, nothing but up. It's a staircase. 6-month chart, marching steadily. Year to date, again, marching steadily upward. Closing today at, again, another 52-week high. Jumping over to silver real quick, we're up at 28.53. It breached that critical level of $28. Currently looking at 28.53. I see the quote in the chat, 28.73. I believe it did hit that today. I think the intraday high was 28.54. I don't know if that's correct. I saw it. I did see trading at 28.60 or so. But again, some sites quoting different trading sites and different bank quotes. But there's a lot of factors, a lot of things taking place, right? Asian central bank demand helps push gold to another record high. This is earlier in the week. Gold prices extending records on Monday as it smashed more records. China central bank adding 160,000 ounces of gold to its reserves in March. Turkey, India, Kazakhstan, and some Eastern European countries also buying gold this year. The market is pricing in rate cuts. We'll see about that. They're pausing, as we know. They're hesitant because they know what's going on. Inflation's out of control, and there's some troubling news coming out about inflation numbers. As we all know, it's worse than they think it is. We know how bad it is. We've been pointing that out. These are the very individuals that couldn't call it. They said it wasn't there. They didn't see the inflation. They weren't concerned about it. Then it was transitory. Then it went from transitory, well, they eliminated that word. It was hot. It was heated. Remember all the adjectives they used to describe inflation? Incessant, hot, persistent. Something I sent some friends earlier is first, and I'll just read this to you. I was talking to a friend. I said, first they claimed there was no inflation. Then it was transitory. Then it was stubborn. Then it was hot. And now we're seeing headlines, and I'll show you one here in a moment. But they've proven time and again to be unaware, clueless, or they're culpable, right? This is a spiral of debt and debasement. And I urge all of you to read, again, chapter 28, Dying of Money. We are in a phase of unstoppable momentum to where no law, no edict, nothing they do can halt this. They can no longer stop or even get in the way of this train. It's moving. The brakes are broken, and we are on the inflation train now, possibly the hyperinflation train. But again, I did a video on this 2 years ago. The fear of hyperinflation is highly overstated. But hyperinflation, as I'll remind many of you, I'm interrupting my little reading here, but it only devours the remaining 4% of value of any currency historically. So really, you're only going to lose 4% of the remaining value of a currency when hyperinflation sets in. The 96% that's devoured takes place just in the regular inflation that's devouring the value of that currency, the purchasing power of that currency. And if you want to go into the archives, you can find the hyperinflation video. I think you can even search by title name to find that one. But this is the spiral of debt that we've been waiting for, one of them, I believe, and I think we're on the verge of it. Let's take a look further. But other nations, as this article points out, are gobbling up gold. We already know de-dollarization began over the last 2 years, probably before that. Powell admitted it. Powell admitted a new multipolar world is here. He himself admitted that dollar hegemony is over. It's dying. And we're heading where all fiat goes. We know where this stops and we know where it goes. All fiat dies. All of it, every time. Lifespan is approximately 30 years on a fiat. How many years has the dollar been unpegged from gold? Since 71, since Nixon closed the gold window. You just saw it in the video. Every video plays that clip. What is it, 54 years now? It's over, man. It's over, man. They will not and cannot reverse this course. There's no going back from here. No society, no empire, no government, no tyrant, no king has ever been able to successfully reverse the course we are presently on. And that is a very important point to grasp. If they cannot halt this, where does it end up? Where do we end up from here? We end up with a dead fiat currency. And there's only very few options to maintain your dynastic wealth or to preserve your stores of labor to give you purchasing power in whatever the other side of this reality looks like. There's only certain places you can park your wealth that will preserve it to break on through to the other side. Mrs. Maltby, what song is that? Musical genius. Break on through to the other side?
It's The Doors.
The Doors. There you go. So cue the song The Doors, Break On Through to the Other Side. May that be your theme song as we traverse this plane, as we move through space and time with Janice, the cult leader. I think Janice should have made a showing for the
eclipse.
For the eclipse.
Janice was there.
Greetings, friends. Welcome to my following as we travel through space and time as the sun blotteds itself out. Yes, we are traveling through space and time. And as we break on through there to the other side, there's going to be a change in what is valuable, what is not, what dollars can purchase, what they cannot, if the dollar even remains during that period. We're in a time where gold is up, interest rates are up, bonds are down, the US dollar against gold down, real stuff is up, paper promises are down. Let's take a look over at some of these. They're calling it super core inflation. Where am I at? Okay, so we got the central banks buying, right? And then we've got the Fed wants more confidence that inflation is moving toward 2% target, meeting minutes indicate. Federal Reserve officials at their March meeting expressed concern that inflation wasn't moving lower quickly enough, though they still expected to cut interest rates at some point this year. And when they do, metals will continue moving in the direction they're moving in. At a Fed meeting in which the Federal Open Market Committee again voted to hold short-term borrowing rates steady, excuse me, I'm getting over this cold, don't worry, it's almost dead. I've killed it with tea. Policymakers also showed misgivings that inflation, while easing, it's not easing. They like to use these funny words, but they don't know what they're talking about. It wasn't doing so in a convincing enough fashion. The Fed currently, this is like, imagine you're dying on an operating table, and this is the kind of language the doctor's using on whether or not you're going to make it. We've got some misgivings. We're not really convinced yet. We're going to hold off. We're trying things. The Fed currently targets its benchmark rate between 5.25% and 5.5%. It used to be lower than that. They're going to allow your wealth to be eroded at like 6% a year, that they'll admit. Who would hold leper currency in this environment where your wealth is burning at 6% a year guaranteed? And we know it's in the teens. We know it's 15% to 20%. Anyone who knows the real numbers on inflation knows that the numbers these guys put out are BS. It's much worse than they reveal. Participants generally noted their uncertainty about the persistence of high inflation and expressed the view that recent data had not increased their confidence that inflation was moving sustainably down to 2%. In what apparently was a lengthy discussion about inflation at the meeting, officials said geopolitical turmoil and rising energy prices remain risks that could push inflation higher. Those don't push inflation higher, but man, you guys do. You see, you made too much of it. You printed too much. You gave too much away. We know how it all works. We've seen the numbers. They're giving it to other countries, Ukraine, Israel, everyone else. Military-industrial complex gets quite a bit. And then what was that? What was that cough, the virus that came out a few years ago? Everyone was getting checks in the mail, and there was all that stimulus, quantitative easing. They did that for years, right? The borrowing, the 0% reserves by banks, all that high risk, that market hubris. Yeah, they pumped it. They pumped those markets up. It's all artificially sustained. Some participants noted that recent increases in inflation had been relatively broad-based and therefore should not be discounted as merely statistical aberrations. These are not statistical aberrations. CPI validates the concern. The Consumer Price Index, a popular inflation gauge, though not the one that the Fed most closely focuses on, showed a 12-month rate of 3.5% in March. I always add like 10% to it because that makes it more accurate. So it's about 13.5%. That was both above market expectations and represented an increase of 0.3 percentage points from February. Given the rise to the idea that hot readings to start the year may not have been an aberration. Yeah. See, they don't even know what's happening, and they're remaining cautious. Super core inflation measure shows Fed may have a real problem on its hands. I believe, this is yesterday's article. Yeah, the super core inflation. Markets are buzzing. Buzzing. I like that. Markets are buzzing. Who's buzzing? Like bees? About an even more specific price gauge contained within the data, the so-called super core inflation reading. The gauge measures service inflation, excluding food, energy, and housing, because we don't need those things. Food, it's like literally, what is the hierarchy of needs? Maslow's, is it Maslow? Maslow's high. They exclude those: food, energy, housing. You don't need those things. And the reason they don't count those is because those are going up a lot. But don't worry, Pocahontas is on it. She's going to make sure they put more chips in the bag. That's her big mission right now with inflation. It's been roaring higher at 4.8% year over year. If you start throwing in food, energy, and housing, it's way worse. And more than 8% at a 3-month annualized pace. The picture is more complicated because some of the most stubborn components of services inflation are household necessities like cars and housing insurance, as well as property taxes. All of them going up, and they're blaming it on inflation, and then inflation blames them. Everyone's blaming each other. You know, the taxes going up in the local areas that are raising taxes are saying, oh, we have to raise taxes because of inflation, all the cost of our services and all the things that you get, like your sidewalk or your whatever, right? They're raising taxes because inflation. And then these guys are saying, well, inflation's going up because they're raising these, and they're doing that. A lot of finger pointing. It's like the Spider-Man meme. A hotter than expected consumer price index report rattled Wall Street Wednesday, but markets are buzzing about an even more specific price gauge contained within the data, the so-called supercore inflation reading. Along with the overall inflation measure, economists also look at the core CPI, which excludes the volatile food and energy prices, to find the true trend. Now, food's not, I didn't think food is that volatile. You know, an apple, some groceries, you know, some celery, a loaf of bread, some meat, perhaps, when you go to the grocery. Those prices are steadily rising as a result of inflation, as a result of too many dollars circulating and competing for a certain fixed amount of goods or services.
Yeah, but you're supposed to skip meals to alleviate that.
Yeah, I can skip breakfast. Fed officials say it is useful in the current climate as they see elevated housing inflation as a temporary problem and not as good a measure of underlying prices. Supercore accelerated to 4.8% pace in March, the highest in 11 months. Ongoing problem, CPI 3.5% year over year last month. Dow Jones estimate called for 3.4%. The data pressured equities and sent Treasury yields higher. At the end of the day, they don't really care as long as they get to 2%. That's the little magic number for them. That's their little goal. They're not going to get there. And if they do, they're lying. Okay? You can't trust these people. Remember, there's names. There's positions. They're the ones responsible. They did this. There's faces, names, and positions that are directly responsible for the policies and the activities that created the environment of these numbers. This doesn't just spontaneously ooze into existence. All right? This is the result of them. It's sticky. It's a sticky inflation problem. It's hot. It's sticky. It's really gross. The way they describe inflation in the article, it's kind of disgusting. It sounds like a disease process or some cough like I have, like some mucus, like lung butter being hurled out of someone's bronchial tree. It just sounds like a loogie. A sticky inflation problem. Further complicating the backdrop is a dwindling consumer savings rate. People can't save in this environment. People can't save. They're spending all they have. They're living paycheck to paycheck, and they're still going in debt. Consumer debt is rising. Consumer savings. Higher borrowing costs, which make the central bank more likely to keep monetary policy restrictive until something breaks. The Fed will have a hard time bringing down inflation with more rate hikes because the current drivers are stickier and not as sensitive to tighter monetary policy, he cautioned. Fitzpatrick said the recent upward moves in inflation are more closely analogous to tax increases. Inflation's a hidden tax. It's theft. They devalue and debase your currency so that they can have it first. We all know that. They're just reaching their hand around and taking the money out of your wallet so they can give it to Ukraine. While Stanley opines that the Fed is still far removed from hiking interest rates further, doing so will remain a possibility so long as inflation remains elevated. I think, by and large, inflation will come down. It won't. And they'll cut rates later than we thought, Stanley said. The question becomes, are we looking at something that's become entrenched here? At some point, I imagine the possibility of rate hikes comes back into focus. They don't know when they're going to cut them because they don't know where it's going. They don't know how bad it's going to get. But we do. We have somewhat of an idea because there's other numbers we can look at. You see, the 10-year Treasury yield jumps back above 4.5%. No one is buying them. No one wants to loan the government money. Why would you give this crackhead, this heroin addict, this street urchin, this transient? It's like a Jethro Tull character. What's that song? Aqualung. Why would you loan money to Aqualung? That's the United States. Sitting on a park bench. 10-year treasuries are up. And I think they're up even further. I'll take you over to that chart in a minute. Another friend of mine pointed this out. Japanese yen. The yen dollar. They're having a real big problem over there. I mean, Japan is no longer capable of lending to the United States. And it was one of our greatest lenders. They were the buyers of U.S. Treasuries. And the yen is falling in value in its purchase of dollars. And as you can see by just this 5-day chart, it's now 153 yen to the dollar. Getting worse and worse and worse. You can look at it trending pretty radically. And over 6 months here's a 3-month chart again. But the Japanese bond market as well. Here's a Japanese government bond, 10 years. 5-day chart on that, taking a jump here coming up. You'll see it. It just jumped from about 0.80 to 0.857, almost 0.86. Boss Grand, hey, thanks for the super chat, my friend. He goes, the end is near. You can feel it in the air. Silver will be free. It's going to move. So it's breaking free as we speak. Very good point. Very good comment, my friend. And thank you for the super chat. I appreciate that kind of support on this channel. It's good stuff. People like you keep this channel alive. All of you do. The motivation, the reason I'm here is because you are there in the chat. So the Japanese 10-year government bond rising as well, trying to elicit some type of buying. But people just aren't into it anymore. Here's the 10-year U.S. Treasury, 4.595, almost 4.6. And we talked about this the other day. We went back and looked at it earlier in the year. But steadily rising, the U.S. 10-year Treasury. Trying to pull up the chart. There you go. It went from 4.2 right there in the beginning of April. Now it's 4.6. U.S. 10-year. Who's buying? Who's buying these? Who's lending money? Who's guaranteeing themselves a loss? Who's locking in on these 4% yields for 10 years? Who would do such a thing? When they can buy, when I just showed you, I just earlier showed you what gold does year over year. Didn't I? Where was that? Where's my 10-year? Here it is. I just showed you these. I just showed you these numbers here. All of these. Gold destroys 10-year treasuries. Destroys them. It's absolutely, there's no motivation to buy 10-year treasuries. None whatsoever. Especially when you understand the real inflation. The real inflation. So where are these numbers headed? Where is silver headed? At 28.60 currently. The gold-silver ratio today, let me find it for you. Let me just do it real quick. I don't have that pulled up. I'm going to call gold at 2,400, and I'm going to divide it by 28.60. We're looking at an 83.9, about 84. We're going to call the gold-silver ratio. I know a little bit, well, it's a hair this way or that. 84 to 1. Takes about 84 ounces of silver to get an ounce of gold today. Now, I would like to see that close up at about 30 to 1. And if gold didn't move, if gold just stayed here, and we did get back to a 30 to 1, we'd be looking at about $80 an ounce of silver. Gold's going to keep marching, however. It's unstoppable at this point. I believe silver's finally moving. It's finally motivated. It's playing some catch-up. And it's going to continue in that direction. I do believe that. I think we're going to see gold hit that 3,000 sooner than later. Much sooner than later. And again, if you get a 3,000 and we're at that 30 to 1, what are we looking at? We're looking at what? $100 gold? Or sorry, $100 silver? So if you get to that 3,000 range with gold, and we get that $100, we break that if we finally smash $100 an ounce on silver, absolutely within the realm of reason, it's going to keep going. And it could easily start marching towards 150, 200. Gold's going to keep going. But they've lost control. I know there was even, I didn't even pay attention to it, but Kramer, I know, cue the Kramer memes. He was talking about gold. I saw a headline where he was discussing the gold, and it got funny coming from him. I don't know what his words were, but if he's steering people away from it or if he's finally paying attention to it. But gold. I thought I had the one pulled up about Costco. Here it is. Here. What's up with gold? Here it is. This is this one here. It's to show you how much attention gold is actually getting in the mainstream. Here's a piece for you. What's up with gold? Gold and silver both being sold in Costco's, right? Here's why everyone from Costco to central banks is rushing in. And this is from Forbes. All right, Forbes put this out yesterday. Normally as mundane an investment as it gets. I don't call it investment really, but gold has captivated the attention of the market lately for its seemingly logic-defying. According to who? It's pretty logical what it's doing, my friend. Record rally in recent months. And now heads are turning toward a new, unlikely player in the gold market. Wholesale retailer Costco. After topping $2,300 per ounce for the first time ever this month, gold prices are up a whopping 25% over last month. A rally for the precious metal curiously overlapping with all-time highs for riskier assets like stocks and Bitcoin. Coinciding with the surge in gold prices is a viral moment for Costco's online sales of physical gold bars. You can add to cart a roughly $2,000 bar of gold next to your toilet paper, but you have to go in person for a rotisserie chicken. Oh, it's a funny joke there, you. You're funny. You're kind of a funny guy. Yeah, I'm not going to mail order a hot chicken. That's how you get diseases and die, my friends. You get food poisoning. Gold doesn't go bad. That's what's great about it. The warehouse's gold bars typically sell out within hours, as the Costco bars pose a surprisingly good vehicle for investing in gold, considering buyers can get cash back via their Costco memberships and credit cards. Wow, I didn't even think of that. So you can buy it and then get it goes towards your cash back with your Costco membership. Interesting. That's something to consider. It's time to start paying attention to Costco's gold sales, which could amount to over $200 million per month. I didn't know that. That's an interesting piece of data. Costco members buying $200 million of gold, physical for delivery, per month? 200? If that's true, what would that be per year? Is that 2.4 billion? Are we looking at $2.4 billion in gold going through Costco's a year in this country? That would be something to consider. That $2.4 billion in physical gold is flying off the market from Costco alone into the hands of just retail. Think of that, huh? Think of that for a moment. Wells Fargo analysts pointed this out, led by Edward Kelly. He wrote that to clients this week, noting it's a smart move for the company, but doesn't expect it to materially impact Costco's overall profitability, considering the bars are sold at close to cost. So this is something to pay attention to. The gold market is telling investors that inflation pressures could linger longer than the Federal Reserve would want. That's something you'd hear right here on this. You've been hearing that here for a long, long time. That was stated by LPL Financial's chief economist Jeffrey Roach. He wrote it in an email comment Wednesday following the release of March's Consumer Price Index data, which revealed worse than anticipated inflation. Costco, $2.4 billion in gold a year, if you do the numbers right, flowing through. You know, that's not a bad place. It goes towards your Costco points, Mrs. Malby. You get cash back at the end of the year if you buy gold through Costco.
Costco is not even worth it anymore.
So what does this tell us again, lady? And again, I don't know the silver numbers, but I know that they started selling silver at Costco as well. So I'm wondering how much silver Costco's moving online. I haven't seen those quotes yet, but it'll be interesting if we could track those. Meanwhile, the dollar continues to hemorrhage, to lose value, and it will continue to do so. There's still turbulent times around the world. The geopolitical outlook is grim. Many of you, if you follow that and see what's happening, the costs of war are rising and growing, the risks of war as well. U.S. Abrams tanks are getting incinerated on the Eastern Front. Those aren't cheap. A lot of things are happening. A lot of turmoil. And I don't see any of the scenarios improving. Not the geopolitical side of things, not the economic side of things, not the outlook for the dollar, not the outlook for inflation. And that's why in today's short broadcast, I would say that what's next for gold and silver is a continuation of this theme. Like I said before, a multi-decade bull run. A continuous bull run. I mean, we have essentially seen that if you go year over year in just this chart that I put up on the screen earlier, in these numbers. Multi-decade bull runs. And always remember, and always remind yourself, and those that you tend to find yourself arguing or debating this subject with, gold's only been legal in the United States since 1974. And it's been heavily controlled, manipulated, and discouraged since then. It's in its own tax bracket. It's scrutinized. It's slandered. They defame it every chance they get. And yet, here it is, smashing 52-week highs like it's nothing. Every single day now. Just breaching new records. Coming closer every single day to its inflation-adjusted high. I think we know where this ends up. And I'm pretty certain we're not going back down to 2000. It's going to take a heck of a lot to get back down to 2000. It's not going to. It would have to shed $400 an ounce in value. And here we are in after hours trading, it looks like. Gold's at $23.92.90. We're $6.10 away, ladies and gentlemen. Do I have the numbers right there? Or am I 7? We're $7. We're $7.40 away. Now the number just clicked again. We're $7.20. It moved again. It's up $20. We're $7 away from $2,400 an ounce. What do you think? You think this is going to continue? The trend's going to continue? Where are the gold bears at? Paging Harry Dent. Paging Dent and Head Harry. Paging all those gold bears that we've seen on the internet with their prognostications, their predictions, their little numbers, their tea leaves, their dollar bull position, the American exceptionalists, right? You know what I'm talking about. The American exceptionalists. The people that have American privilege, U.S. privilege, dollar privilege. Oh, it can't happen to the dollar. Dollar's the greatest currency in the world, man. It's the United States of America, man. Yeah, man, they invented the A-bomb, man. They got nukes, man, and F-15s. You can't mess with them. America, heck yeah. They saved the world, man. Where are they? Where are all the gold bears at? Where are my pro-dollar bulls? Come on out. Come on out. Jump in. Paint the picture for us. Tell us why the dollar's going to survive this. Tell us why it's so good. Tell us why people should not buy gold now. Why they should sell their gold and silver and just hold dollars. Please, I encourage you. Welcome. Leave a comment. Jump into the fray. Come on. Pause your sports for a moment and explain to us in small words, and if you have to, draw with your favorite flavored crayon a picture that we may understand your very simple understanding of things. Pick up your knuckles that are dragging upon your floor and please illustrate for me your position. Why is it gold will plummet from here? Why? Please, share with us. We're waiting. We're sitting here on the Junior Small Pay channel waiting for any dollar bull that wants to. The thing is, you can't convince me. All of your arguments are unintelligible. All right? They're nonsensical. It's babble. It's gobbledygook. I don't want to hear it. It makes no sense. There is no logical explanation on why one should hold dollars, on why one should be discouraged from taking positions in metals. I've seen a lot of volume lately, even from contacts of mine, anonymous contacts. Of course, I'm not going to name them, but people who have made significant acquisitions in physical metals that have sent me information, images of receipts, discussions on amounts and weights in metals they've acquired in just the recent time period. They're not discouraged from buying metals at these levels because I think they know what's going on. There's people draining investment accounts, escaping the markets, liquidating retirement savings in places to take physical delivery of metals in preparation for what might be coming. This accelerated, unstoppable inflation, this destruction of wealth, this devouring force with an insatiable appetite to destroy that which is yours, your store of labor, your wealth, your personal language of value, that which you use to survive, to acquire goods and services, to pay the bills, that which you've worked so hard for all of your life. It's being devoured, eaten. It's rotting. It's like a wool garment covered in moths, or a steel blade cast into a salty ocean. It's being eaten. It's being corroded. The force of inflation is here. It's here to stay, and it will devour all that you do not protect. That's just the way it is. So the action is up to you. The time to act, when you act, how you act, what you do to protect your wealth is entirely up to you. No one is coming to save you. No one's going to help you. No one's going to make those transactions for you. You're alone. I hate to say it, but you are indeed alone. It is up to you. How much of your wealth you preserve, how much of it you save, how you protect yourself going forward, your family, your future. It's up to you. I can't do it. No one else can do it for you. All right. That's it, my friends. That's it for today's broadcast. It wasn't a long one, but thanks for tuning in. Thanks for being here. Thanks for your support. Hit the like. If you like the content on the Junius Morby channel, by all means, hit the thumbs up button and share it. Send it to family members who might not be fully aware. I'll make the argument for you. Hit the like, hit the share, leave a comment down below. Debate some gold bears. Invite them to the channel. See what they have to say. Ask them how they're doing. Check in on them. Yeah, you know any gold bears? You might want to check in on them. Call them up. Send them a friendly text or an email. Hit them up on Bookface or wherever the hell they hang out. Just see how they're doing. They need it right now. They're not feeling too good. Because guess what? Gold just got a heck of a lot more expensive, and they're going to get a heck of a lot less of it. That's something to consider. You and I, all of us, we got a little bit poorer today. We got a little bit poorer this week when it came to how much metals we can buy. Did your wages go up 25% this month? Because against gold, we all took a 25% cut. We're all making 25% less now in gold. Because as gold is the ultimate settlement of all transactions, the ultimate extinguisher of debt, the ultimate liquidity anchor, the ultimate store of value. If gold is money, everything else is just credit. So when it rises like this, we all acquire less of it with our fiat wages. So indeed, we are all that much poorer for it today. Have a good one. Take care of yourselves. Be well, and thanks for being part of another extemporaneous rambling of a madman here on the Junius Maltby channel, the most boring channel on YouTube.